Everybody, this short tutorial is to help you try to figure out when is the best time to get into a trade and get out of a trade. So I've got a stock here. This is we're looking at a live market, so it's being traded actively as I record this. So you're going to see it move, which is kind of cool. And what I've done is I've drawn a trend line down right here. And this trend line indicates to me what my ceiling is. Now, in this particular case, I'm not going to draw a trend line on the bottom because what I've noticed is when we get down to the 50, it always seems to bounce and come back up. Well, I'm looking at this for a call play. As you can see, we hit the 50 here, bounced. We got close to it here. We hit the 50, we stayed. We're bouncing off the 50 now. This is not really a great example, but let's say this has only done this once, okay? Well, I'm looking at it for a call play. Well, I've got my ceiling. Here's my sell point. I'm going to get in down here and I'm going to sell right here. Well, what I can do for my sell point is I could just scooch that line in because I want to be a bit more conservative, all right? And I'll just go ahead and say edit, and I want to extend right. There we go. That draws that line off the right-hand side. So as this begins to move back up, this will indicate to me my sell point. So I'd scooch this line in a bit because I want to be a bit more conservative. I want to make sure that I get out of the stock before it actually turns. So I actually scooch my lines in. You don't have to. If you want to, you can continue to ride, but that's what I do. Now my bottom, I'm not going to draw a line of support for it because, again, what happens is this 50-day moving average, okay, tends to act like a level of support for the stock. All right, so now I know when I'm going to get out. I've set my out point by drawing that trend line across the peaks and then scooching that line in. Okay, let me just do that for you live. I'll just go ahead and delete it. Then I'm going to go grab my trend line tool, and we're going to go across the peaks right here. That looks good. And then I'm going to say edit drawing, extend right. Okay, and that will go off the page. As I pan back down, it will just continue to draw that line to the right forever. Okay, so that's my get out point. And what I'm going to do is scooch that in. I'll pull that in, okay, because that gives me some cushion to get out of the stock before it actually turns to come back down. In this particular case, I don't need to draw a parallel line. I could if I wanted to. I could say create parallel line, and then I could move that down to my valleys, okay? And that could be my get in or get out point as well. But in this particular case, the 50-day moving average, which is this blue line right here, is acting like a line of support. So I may be considering this for a call play. In all actuality, like I said, I probably wouldn't get into this one because it's been on that 50 for too many days in a row. But this is, I'm considering it. All right. So what I want to do is I want to put a line on my 50-day moving average right here. So I'm going to zoom in. And you can see we actually went below it, but came back up. I'm going to drop my plot line right there on the 50. There we go. Now I'm going to bounce over to the minute, and I'm looking for a good buy point to actually get into it. Let me back out. This yellow line represents our open. So the stock opened here and went up above it, and it's been fluctuating ever since. This white line is that plot line that I drew on my 50-day moving average. So we crossed over the 50. Well, once we cross over the 50 and we do it on heavy volume compared to the bottom of the chart down here, I see heavy volume down here, and I see a long candle matching with it. It needs to be a long candle, not a short candle. Short candles are the market makers manipulating the stock to try to entice you into it. So don't pay attention to the short candles, only pay attention to the long candles. Well, once we pass back through this, okay, and we did it right here. I've got a long candle here, I've got a really long candle here, and it matches to the volume below it on the volume chart for the day or for the minute. Well, now I'm ready to buy in. Okay, this confirms to me that it's going my direction. Okay, well, you can see the stock breathed a bit. Didn't stay there long, but went back up. What I want to do is once I've confirmed, I'm going to let it breathe a bit, and I'm going to probably buy right down in here. Once it breathes a little bit, that's when I want to buy. I want to catch it on a little downtrend to actually buy the option because that is devaluing the option, making it cheaper for me to buy. So if you were to get a text message off the instant alerts, and by the time you look at it, you're here. Well, don't just buy straight into it if you decide that you want to do it. Wait for it to breathe a little bit and maybe buy down in here. It may continue on past that point a little bit, but it's going to come back up. Okay, so That's how you know when to buy. Set yourself some lines, watch those moving averages. They act like lines of support and resistance, and compare them to the volume. Okay, you want not only high volume, but you want to see a long candle. That indicates that somebody bought a lot of shares into that particular position to move that. That's what you're looking for. And then when you see it, wait for it to breathe a bit before you buy into it, because that will devalue the option, make it a little bit more affordable for you to buy. Now, when I get out, I'm just going to get out. I'm not going to wait for it to breathe. When I hit my trend line, so I'll go back to my daily. There we go. Here's my daily, my trend line. This is my ceiling that I've already drawn for myself. When that stock gets up to that point, I'm out. I'm done. Okay. I'm not going to wait for it to breathe. I'm just going to get out for it. One other thing, as you're on E-option and you have a choice, you could do a market order, you could do a limit order. Do a limit order every single time you can, okay? Because you're going to get a better deal. Don't do the market order if you can help it. I mean, there's sometimes you just can't help it. You just need to do a market order so you can either get in or get out, because it's just time and you don't want to miss your point. It's okay to do that every once in a while, but anytime you can, even if there's only a 10-cent spread between the bid and the ask, put a nickel difference in there and put a bid in there and see if they'll take it. Always try to bid into your position and bid out of your position if at all possible. Hope that helps. Thanks. Peace out. Bye.